The overall gloom surrounding the global economy is bound to take a toll on Tata Steel's numbers. The steelmaker is expected to see a sharp drop in almost all its parameters, even after its volumes rose in the October to the December quarter. Nikki is here with the expectations and why, despite the volumes, the numbers may look iffy. Nikki.
Hi Neeraj, it's essentially because of the realization HRC prices, they have taken a hit 30% down year-on-year basis, which in turn weighs down on the earning performance of the company. Consolidated basis first, year-on-year basis, top line we're expecting to see a 15% downtick there and a 40% downtick in the operational performance of the company. Margins are expected to contract to 11% as compared to nearly 16% that we saw in the corresponding quarter. A couple of things actually, a couple of factors which go behind the making of these numbers. As Neeraj just mentioned, it's the India business which is expected to post a disappointing show, which is on back of lower realization. There is a EBITDA loss in Southeast Asian business and deterioration in European business. All these parameters in turn are expected to weigh down on the consolidated performance of the company. Look at the volume picture. Now, actual volumes have already been reported by the company. And if you look at the Indian steel volumes along with that of Bhushan Steel, they all show an uptick. Look at Tata Steel India. 3.58 million ton reported as compared to 2.97 MT in the corresponding. Bhushan Steel shows an uptick. For European business, that takes a small amount of slide. You know, there's a hit there. 2.31 MT compares to 2.35. And Southeast Asian business, as you can see, that also is pretty much flattish. Even in the sentiment has improved for the Indian business, but overall for SEA business, where there is a sluggishness in Singapore and Thailand market, that is expected to weigh down on the earning performance and lead to an EBITDA loss for this unit as compared to an EBITDA profit that we saw in the corresponding quarter. Just speaking of the standalone business, that's essentially where the focus lies and also is the key contributor now to the earnings. Those numbers don't look pretty either. Look at the top line performance. We're expecting a 10% growth, a 10% decline out there, 22% hit in EBITDA performance, margins at 22% as compared to 26%. HRC prices, as I just mentioned, 24% downtake on account of which realization takes a hit. Coking coal price, some kind of relief coming in there, but not enough to take off the pressure. Overall, if you look at the Tata Steel European business EBITDA, we're expecting that number to come at 100 crore as compared to 900 crore in the corresponding quarter. Southeast Asian business, where we're expecting a loss of around 76 crore, that compares to a profit of 10 crore. So clearly you can see the disappointment creeping in even from the overseas subsidiaries as a whole.
What's that one number, Nikki, that you would watch out for today? I think the numbers come out post-market hours.
Yeah, and standalone EBITDA per ton, 9,862 rupees per ton. That's the one number that I'll keep an eye out, because standalone EBITDA per ton, if it's in line, it's an in-line set of numbers.
Okay, so watch out for the standalone EBITDA. If that is in line, then people would largely believe that it's an in-line set of numbers from Tata Steel. Thanks so much, Nikki, for putting that into perspective. So that's as far as Tata Steel goes.